Hello everyone and welcome to our next technical analysis review for the Euro US dollar pair. Today is February 9th, 2012 and we are currently looking at price action on our 10-minute chart. And as you can see, today was marked with much event risk and headline risk. And you can see this with the strong swings in the market and strong pullbacks in price. And although the sentiment was slightly bullish for today, you can see that price behavior was still marked by much volatility in the market, and this was due to uncertainty in the Euro US dollar pair. And as we continued to hear news throughout the trading day, you can see that the market went from being risk on to risk off and back to risk on again. And even in the midst of this risk on and risk off behavior, the pair managed to rally 107 pips from the session low here at 32.15. So let me go back to the Asian trading session, which is marked by this vertical line. Now, right around the open of the Asian trading session, you can see that price was above our daily pivot point, but then it eventually broke through this daily pivot point level at 32.56, and it began to slide, and it found support at this 32.15 zone, or this 32.15 area. Now, if I was to move to my 1-hour chart, you can see, if you glance to the left, you can see that on 2 occasions, this 32.15 zone served as resistance. One on February 1st, you can see that it found resistance here, and also on January 31st, this 32.15 area served as resistance. So let me go back to the 10-minute chart. So if you were in front of your trading platform at that time, when it reached this area of support at 32.15, you could have actually placed a buy order upon bullish confirmation and closed your trade once price reached this daily pivot at 32.56 for about a 40 pip trade. So then, as you can see, for most of the Asian trading session, the pair began to rally as investors became more confident that a Greek debt deal would be agreed upon, and price found resistance at this 33.12, 33.13 zone, this 33.13 area. Now, if I was to draw a Fibonacci retracement from this particular rise from 33.12 down to our session low at 32.15, you can see that once price rallied up to this resistance at 33.12, you can see that price retraced back, and it actually found support at the 38.2% level of this particular rise. So if you were in front of your monitor at this time prior to the European Open, you could have placed a buy order here upon bullish confirmation, and you could have actually bought and closed your trade out at this psychological resistance at 3300 for about a 25 pip trade. So then that was one entry right there you could have bought at. Now, once price reached this 3300 level, we see that there was a change in sentiment. You can see this marked by the strong bearish candle that we see here taking place. That means that there was strong momentum in favor of the dollar. There was strong selling in the pair. So then, since we saw from our price action that the sentiment has changed, now we should be looking for opportunities to go short in the market. So with that being said, once price reached this resistance at 3300, you began to see it slide, and the pair actually fell and found support at our 50% Fibonacci retracement level. But it was not only our 50% Fibonacci level, it was also where our 100 SMA line was, and also where our 200 SMA line was. So we see confluence, and this was an area of support. So once it hit support, what we want to do is we want to look for an opportunity to buy on a pullback off of support up to an area of resistance. So you can see that once price hit this support at around 32.64, you can see that price retraced and pulled back up to this area at 32.86, and it stopped there. Now, if you glance to the left, on the left side of the chart, you can see that this 32.86 level was at one point resistance on yesterday. It served as resistance. And let me put a line there to prove that this was an area of resistance. So then you can see on a few occasions yesterday, price attempted to break above this 32.86 zone, excuse me, but it couldn't. So with that being said, since we were now bearish in the market, and now since sentiment has changed in favor of the dollar, we could have placed a short here and sold the euro US dollar pair, and sold it upon bearish confirmation, and we could have closed out our trade near our daily pivot level at 32.56 for about a 24 pip trade. Or what you could have done, you could have been a little bit riskier, and if you wanted to, you could have held on with the momentum and held your trade out until it reached this 32.45 level, which was our 38.2 fib level on our daily chart of the last leg down from our October high, down to our January low. So then you could have closed out your trade here for about a 35 pip trade. So that was an opportunity to go short. Now, prior to the U.S. Open, there was two central bank announcements that we had. The first was from the Bank of England around 6 a.m. They announced what they were going to do with their interest rate, but also whether or not they were going to implement another round of QE or do another round of their asset purchasing program. So they announced that they would, and this added risk appetite to the market. So then we see the strong move upward in price in the euro. You know, even though that was the Bank of England, it affected the pound. Normally, because they're not, you know, they're sort of connected across the channel. They, you know, they do a lot of business with each other. It would affect the euro. So then, even though this was a pound move, it still would affect the euro. So then we see this spike up in the euro pair, and but that not only happened, we also had an ECB meeting as well around 6:45, and they kept interest rates at the same level. But like around 7 a.m., we heard news from Greece that they had come to an agreement on how much they were going to cut, and that they had agreed upon a deal. Sorry for that. And this caused risk appetite to be, to be maintained in the market. So then we saw from this low here that the market continued to rally for most of the New York trading session. And you can see that price broke through key areas of resistance, and it actually reached our daily high at 33.22 level. And from there, the pair began to slide, and momentum began to slow down for most of the day. And right now, you can see that the pair is consolidating, waiting to see what will happen around the Asian Open. It's consolidating around this 32.86 zone, which we spoke about earlier. But that's it for the technical analysis review for today, and I will be talking to you guys later. Okay, you guys have a good day. Okay, then bye.